Hi, my name is Julia Cato. I'm one of the financial analysts here for Coca-Cola. I've been asked by our accountant manager to create this presentation for you, analyzing the statements of cash flow for Coca-Cola and the financial strengths and weaknesses for the company. So first and foremost, let's jump in here. We're going to analyze sources of cash flow from the three primary sections of the statement of cash flow, being operating, investing, and financing. So first, we're going to define each of those terms, and we'll provide two examples for each one. So operating, first we look to operating. These are our day-to-day operations. We're producing and we're selling our product. So two examples of this. First and foremost is net income, listed at $9,804,000,000. This is when we take our sales and we cancel out what we've paid for product. We take out our expenses, and we really look how much money have we made at the end of the day. So that's our operating income, our net income. Our second example is those deferred income taxes. For financial reasons, we've deferred those income taxes. That comes out to $894 million, and that produces a cash flow for the company as well. We'll look to the second section in the middle here of investing. First, this is buying and selling of assets. So we allow other people to invest in Coca-Cola so that we are then able to have that cash flow to then produce more product, thus having more sales. And specifically, we're going to look at PP&E, which stands for property, plant, and equipment. So our first example here is of investment disposals. So when we're disposing of those investments, that's when we're selling them off to, again, generate that cash flow. This line item has generated $7,059,000,000 in cash flow for Coca-Cola. The second example there on the bottom is PP&E, again, that property, plant, and equipment disposals. So again, we're disposing or we're selling that PP&E, and that generated $108 million for Coca-Cola in 2021. We're going to go to the third column here in our financing section. First, the definition is capital changes that impact liability. So this is where we're getting into the nitty-gritty of running a business. So this is when we're issuing debt and we're issuing stock in our company. So we're allowing other people, again, to invest in our company so that we're able to produce more of a profit at the end of the day. So issuing debt brought in $13,094,000,000 in cash flow for Coca-Cola, and issuing stock brought in $702 million of cash flow for Coca-Cola. Once again, we're going to look at these three different sections, but at this time, instead of the sources for cash flow, we're going to look at the use of Coca-Cola's cash flow. So first, under operating, we have materials and supplies. Of course, we're buying supplies to make our product that they were then going and selling. And secondly, employee salaries and benefits. So we have our factory workers, we have our delivery trucks, we have lots of people working on a team to make Coca-Cola the best product and the best company that it can be. So those salaries are, of course, an operating expense. Our second section here of investing, where we purchase long-term assets, again, land, buildings, equipment, and then secondly, that equity security all fall under investing and ways that we use our cash to then fund Coca-Cola's products. Third and finally, we have financing. So this is where we're repurchasing of common shares. We're strategically taking back parts of our company to then invest in other areas. And then payment of dividends to shareholders, people who have invested in Coca-Cola in the past. Of course, we pay them back for that generous investment, so that, for their belief that we can become the best company that we can be. Next, we're going to look at the differences between net income and cash. So first on the left hand, we have net income, which was $9.8 billion for Coca-Cola in 2021, as we've previously mentioned. This, of course, is calculated by just subtracting operating expenses from our salaries, or our sales revenue, excuse me. And this provides a measure of company success by looking at a particular period of time. So whether that be a fiscal year, a quarter, or another time period. In contrast, we have cash flow, which was $9.6 billion for Coca-Cola in 2021. So cash is always being earned and spent. So it's a bit more of a subjective measure for company success, because even though we want that cash flow, we want company cash coming through and back out of the business, it's a bit more subjective when you look at the bigger numbers, just because of how much cash flow can flow sometimes. This is just a screenshot from our 10K report for 2021, pages 63 and 62. Highlighted in red are all the numbers that we've talked about in this present so far. So I just wanted to provide some context for you there that you can review at a later time. Finally, we're going to look at our financial strengths and then later our weaknesses. So on the left column here, we have predicted continued success for Coca-Cola for these four primary reasons. One, our net income is of $9.8 billion in 2021. This, as we talked about and mentioned before, net income is that prediction for success. So $9.8 billion being a huge prediction for success in the future. Second, of course, financial strength is our cash flow, a very high number of $9.6 billion for our cash and cash equivalency. Third is that PP&E, where Coca-Cola has $9.9 billion stored up in our PP&E, which shows that Coca-Cola is really investing as a company back into itself, back into its products for the things that they need. And fourth and finally, we have our total assets, which combines a few of these different numbers into a grand total of $94.3 billion in total assets, which is a huge financial strength for Coca-Cola. Now we're going to look at some financial weaknesses. First being operating expenses are very high for us, $12.4 billion in 2021. We're working to lower those operating expenses so that we can once again increase our net income. Our second weakness here is the liability. So we have a high liability load of $19.9 billion. Many financial advisors are saying that Coca-Cola will continue to have challenges with this high liability based on the increasing yearly trends. So if you look back to 2019, 2020, and then now in 2021 and going into 2022 financial fiscal year, we're seeing that it's still increasing. So this is something we're really brainstorming, working on to lower this financial weakness that we're experiencing. Here are my references. Thank you, and please let me know if you have any questions.